Do you know the exact difference between a high probability order block and a low probability order block? In this video, I'm going to show you everything in details by so many examples. So let's get into it right now. Hey, what's up you guys, this is Irfan here with the Incubator.com and welcome to another video. In today's video, I want to show you the difference between a low probability order block and a high probability order block. So when I say low probability order block, it doesn't mean that they don't work. To be honest with you, most of the times low probability order blocks work really well, and as you can sometimes the price just blasts into the high probability ones and tap into the low probability ones, and then you can take your trade. I had some videos for that. You can watch my previous videos after this video. So I'm in gold right now, gold 5-minute time frame. And I have two examples in one picture, as you can see right here. I didn't prepare this video, guys, to just show you all the examples. I want to do everything live on this video. It's a very short video, and I show you some order blocks, high probability ones and low probability ones. Okay, so if you watch my previous videos, which I highly recommend to do, guys, I only talk about smart money concepts, trading strategy, and order blocks, because this is what it actually works. Watch my first video on my channel, and then I teach about smart money concepts. Okay, so here we have a really obvious gap, as you can see, this red candle, and then a huge spike, a huge push towards upside, and we had multiple breakout structures. See, multiple breakout structures. Very good. So it's a very good indicator that the market is trying to change its direction towards upside just because it broke these structures here, and what it left is a very huge gap between this candle and this order block here. See, this is a very huge gap that you need to pay attention. So what you need to do is just you need to wait for the price to kind of come back to this level. It's just my opinion that it has to do that, but when, we don't know, but it has to fill in the gaps eventually. I don't know when, maybe, I don't know, in a few days when the market opens, or maybe right after the market opens. We don't know that, but it has to fill in the gaps, and it's a high probability order block. The reason is, I'm going to show you what there is a high probability order block. I'm gonna name it like this because of this gap here, and the price never came back to tap into this zone. That's why it's a high probability order block. Whereas this one, guys, oh sorry, let me just do a little backwards. So this one right here, it's a low probability order block, and the reason is that the last red candle after like the candle after this red candle is this one here that has a little bit of shadow here. As you can see, this shadow just came out of the box, and then the next candle after that opened inside the order block, so there's no gap in between. At the same time, it's not invalid. If it was invalid, it would actually come from this it actually came down from this side, and it breaks the order block. But right now it's a low probability order block, the same as this one. See, guys, can you see this gap? And then the next candle opened exactly inside the order block. It makes it a low probability order block. So when it's a high probability order block, it means that we have a huge gap. Not necessarily a huge gap. There is a gap after after the price just spiked towards upside or downside. You got to pay attention to the candle before that, before what that happened, and then you can see whether it's a high probability one or a low probability one. So here we have a low probability order block. See, guys, low probability order block, high probability order block, and low probability order block. So we're gonna go over some high probability and low probability order blocks in this pair, which is gold 5-minute time frame, and I'm gonna show you some examples that what makes it a high probability order block, what makes it a low probability order block, and I hope that you can have a better understanding. So for example, let's see. Okay, so this one right here, see, let me just do a little replay so you can see clearly and don't get distracted. See, guys, at this bearish engulfing candle here, we had a break of a structure exactly below the previous candle, and it left a gap in between. But you got to pay attention to the candle after this one, after this huge drop, to see how it reacts. And as you can see, it didn't get back to this zone and tap into it. It just came down, straight came down. And what we need to do right now is just wait for the price to come back to this level, which is a high probability order block, and then we can take our sell position if we get a good sell momentum. But because of these huge candles here, the price kind of went up to fill in 50% of that. If I'm not wrong, let's do a Fibonacci. Almost 50%. It's just playing around this golden zone, 50 to 60%, and then it dropped significantly. And then you just gotta wait for the price to tap into this zone, guys. See? Very, very beautiful. Very, very beautiful. This is a high probability order block. The next candle literally tapped into this zone, and the next candle after that, boom, dropped like crazy. But you got to be careful if you want to put your stop loss here and your TP right here. You got to be super careful with your one-to-one trade, because it's already a huge drop. It's already a huge drop. You should have taken it right here. It would have been a one-to-one risk reward trade, and that would be awesome. But right now we got to see if you can take that one-to-one, which is absolutely smashed. So even right here wasn't late, and you could literally enter your trade and then just, you know, leave it a runner if you want, or you can close a one-to-one risk to reward trade. So this is the first example for a high probability order block, guys. I can show you the next one. So even this one is a high probability order block because of this huge drop, as you can see, and then the candle after that never tapped into this zone. However, there is a very, very slight problem here, you know, and the problem is that it's so close to our resistance level, and our resistance level has so much liquidity. See, we have liquidity here, so sellers put their stop loss here, and then banks and institutions know that, because this is the highest point, and the highest points are super dangerous if you want to use them as order blocks. They shouldn't be super close to our support or resistance levels. They gotta be somewhere in the middle, and not like, they don't count, and they shouldn't count as the highest or the lowest points. And we don't know when the price is going to tap into this zone, but this is how the game works, guys. This is a very, very good one. And one more example that I can show you here is this one. See this huge gap, like not a gap, a huge bullish engulfing candle, and then this is our order block. So you gotta wait for the next candle that happens after this one, which is this one right here. See, guys, see this candle after this candle. It left a gap. It's not a huge gap, but it's still a gap, which makes it a high probability order block just because of this. So you gotta wait for two candles. The first one is the main move which happened, and you identify your order block for the from the candle before that, and then you gotta wait for the candle after that to see how it reacts. Is it going to come back to the zone and tap into the level and then we take it, or what? So we gotta wait for that. And then the next candle after that, boom, see, it rejected like dramatically. It means that the buyers rejected the price towards upside, and they closed it here. Even if you take your trade here and put your stop loss would be wide, to be honest. So your TP should be wide as well, so you can put it here, because even right here we have so much liquidity. And see what happens. See, the TP is smashed. Easy, 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 easy. Order blocks, guys. The concept of order block is crazy. It's very, very crazy. I personally love them. You just need to identify where the liquidity is, where banks and institutions are planning to go to stop out regular and newbie retail traders, and then they can change the direction of the market. So whether you're a buyer, you should never ever buy at the support level or never sell at the resistance level, because they know where you put your stop loss and you get a stopped out. If you're wondering why you're constantly getting a stopped out, I told you the reason right now. You can thank me later. If you have any question, guys, drop your comment below this video. And one more thing is that the new update for our Forex expert advisor has been released. So if you're planning to kind of trade completely hands-free without getting involved in the market, we released that. It's called EA Incubator. Go check out the smarteaincubator.com. I'm going to leave a link below in the description, and then you can grab your copy and just plug it to your account and just let it run. It's a very, very good Forex expert advisor. It gives you 8% to 20% gain each and every month, completely hands-free. Again, if you have any question, guys, you know what to do. Thanks for watching this video, and I'm out.